Hi guys! Welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. Best ways to make money during inflation. So make sure to watch the full video. How do you make money during inflation? With inflation in the United States at a 40-year high and stock and cryptocurrency markets in bear territory, options are limited. To make money during inflation, start by assessing your financial needs and risk tolerance. Are you looking for passive income today or something that yields returns down the road? This piece examines how certain asset classes may perform during inflationary periods and the interest rate increases that typically follow. Certain asset classes make money during inflationary periods. Looking to make money during inflation, though inflation alone is noteworthy, its macroeconomic consequences, such as increased interest rates and unemployment, as well as its impact on public opinion, can determine which assets over- and underperform. Tangible assets and intangible assets whose value is tied to tangible assets are also seen as performing well in the periods after interest rate hikes, which are typically defined by slower economic growth. Here are a few ways that some people may invest during inflation to either keep pace with it, make passive income, or profit during a later bull market. 1. DeFi Savings App, a new way to make money during inflation. Decentralized finance, DeFi, which differs from more speculative alternatives such as cryptocurrency and stock investments, can yield a consistent return of 3 to 8% API. Gelt High Yield Savings is a DeFi savings app that offers free USD deposits and withdrawals, $100,000 in fund protection per user, $250,000 for Gelt Concierge, and keeps funds provably in your control through non-custodial technology. 2. High Yield Savings Account. The benefits of cash during inflationary periods. A traditional finance high-yield savings account earns 1% APY at the time of writing. Though this type of account will not make money during inflation, it does allow you to keep some savings in cash, which can serve as a hedge during the economic slowdowns that may follow interest rate increases. 3. Real estate, a timeless inflation hedge. A tried-and-true method of making money during inflation is through rental property, which can provide a steady stream of cash. Owning property alone is often considered a hedge against inflation as house prices tend to rise with it. An increasing home value lowers the loan-to-value ratio, so you are, in essence, paying fixed-rate mortgage payments on a house now worth more than its purchase price. 4. Making money during inflation with REITs. For those who cannot own a house, there are real estate investment trusts, REITs. A REIT is a company that owns income-generating real estate such as apartments, resorts, hotels, malls, warehouses, and more. REITs pay a minimum of 90% of taxable income to shareholders in the form of dividends. When the value of real estate rises, REIT investors may benefit from increased dividend payments. 5. Can you make money with stocks during inflation? Historically, equities, stocks, tend to outperform inflation. The average annual S&P 500 index return is around 10%, higher even than the 40-year high U.S. inflation rates seen in 2022. Looking to make money during inflation with stocks in the short term? Consider the type of stock. Dividend stocks often underperform during inflation, whereas companies that can pass cost increases on to customers and those whose value is tied to commodities will perform better. 6. Commodities perform well during inflation. Tangible assets such as gas, cotton, soybeans, wheat, oil, and copper tend to outperform other asset classes and make money during inflation. An increase in commodity prices alone can foreshadow future inflation as the price of individual resources tends to respond more immediately to economic shifts. Experienced investors often trade commodity futures prior to or during inflationary periods. Note that commodities indexes tend to underperform. 7. Gold is considered an inflationary hedge. A commodity, gold is often considered a way to retain or make money during inflation, though this is not always the case. In addition to buying gold, a potential purchaser must also consider how to store it, price volatility, and opportunity cost. Investing in stocks or treasuries may be a more stable way to make money during inflation. There is also the possibility of investing in a gold ETF. There are gold mining ETFs and ETFs that invest in gold trusts in order to track the price of gold bullion. Note that these two types of ETFs are taxed differently. 8. Can you make money on cryptocurrency during inflation? The relationship between cryptocurrency and traditional finance, including the stock market, inflation, and interest rates, has evolved over time and remains the subject of much debate. It is no coincidence that the first Bitcoin BTC block was mined in 2009 during the Great Recession, a period of widespread distrust in the existing financial system. 9. Bonds during periods of inflation. Bonds can allow an investor to maintain her purchasing power. Though U.S. savings bonds may not make money during inflation, they are designed to keep pace with inflation. By contrast, many more speculative assets will lose value at the same time, making bonds a historic hedge against volatility. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go.